Professor G-Man Lopo.
Alright, today what I will discuss is all about financial planning and financial forecasting. Alright, so our focus for today uh, is more on how you will be able to forecast your sales. Alright, and also I will discuss again and also about projecting the assets and internally generated funds. So class, pag sinasabi natin financial planning and forecasting, it is what you call additional funds needed. So very important here to have additional funds needed kasi later, yun yung laging nasa the question when you say about financial planning and forecasting. And number three, projecting outside funds needed and deciding how to raise the funds. So that's your chapter 2 or chapter 2 for this financial planning and forecasting. Okay, so begin. So very important also that in terms of the national or the nature of forecasting is that if you forecast, so the forecasting allows the firm to anticipate the events before they occur, particularly the need for raising your funds externally. Again, very important that in terms of the forecasting is the need for raising the funds externally. Kaya nga tayo nakakaroon ng forecasting because we need to forecast or the planning process for the next 5 years or so. That's why the planning process begins with your sales forecast for the next 5 or so years. Alright. The assets required to meet the sales target are determined and decisions is made concerning how to finance the required assets. Kaya class, nagsisimula ang ating forecasting. Saan? Very good. In the second bullet, the process or the planning process begins with your sales forecast for the next 5 or so years. So how or what is the steps in your forecasting? So requirements, financial requirements that will involve the determination of the following. Okay. So ito class yung ating gagawin. So particularly in terms of your forecasting. Number one, how much money will be the firm need during a given period? Okay. Number two question, how much money will the firm generate internally or through operations during the same period? Please take note class, ang una mong gagawin is that how much money will the firm generate internally first. So meaning class, please take note that we should have to generate first internally. Kaya ngayon number 3, kung wala na talaga if there's no funds that being financed by internal source, how much additional funds or external financing will be required. That's why in number 3, it is also known as additional funds needed. So later class we will compute how the additional funds needed are being computed. So the projected additional funds or external financing will be required. Kaya class pag sinabi natin financial forecasting and financial planning, hindi mawawala ang pag-compute ng additional funds needed. Okay? Please take note of that. Step number 1 tayo class. Okay? Go back to your discussion in your budgeting, in your master budget, di ba? Sabi doon, establish muna in terms of forecasting is to forecast the statement of comprehensive income or also known as your statement of profit or loss or your income statement. Okay. But before that, ano gagawin mo? No? So what would be your first step in your statement of comprehensive income? Okay? So the first step is that establish muna yung ating sales projections. Now if you remember in your budgeting that the first thing that you method is establishing a sales forecast. In your projection, ganun din class, no? Establish the sales projections. And number 2, prepare the production schedule and project the corresponding cost, direct materials, direct labor, and overhead. And number 3, consider expenses, financial, if any. And the last one is about determining your profit. Same na yung class, ha? So, forecast muna tayo about our comprehensive income, followed by the sales projection, then prepare the production schedule, and you have your direct materials, direct labor, and overhead. Then consider the expenses, if any, and determine also the net profit. Okay, so that's basically class, no? Yung gagawin natin about our financial planning and forecasting. Step number 2, what you will do is to forecast naman our balance sheet, or also known as statement of financial position. Okay. So, how do we do that? Number 1, project the assets that will be needed to support your projected sales. Yes, no? Then project the funds that will be spontaneously generated and by the retained earnings. Okay, mamaya I will discuss anong ibig sabihin ng spontaneous assets. What do you mean of spontaneously generated assets? And letter C, project liability and shareholders' equity accounts that will not rise spontaneously with your sales. Okay. Sige, we'll discuss. Sir, what do you mean of spontaneously generated assets or spontaneously generated payable? Okay. When you say about spontaneously generated through accounts payable and accrual, ang tawag doon class ay it will affect, no, in the changes in your sales. What do you mean of this one? If your sales will increase, okay, if your assets is spontaneous, it will also increase your assets. For example, what are the spontaneous assets usually? Cash, account receivable. Di ba, pag tumataas yung ating sales, tumataas yung cash, tumataas yung account receivable, tumataas yung inventory. Okay, meaning to say class, we should establish first the spontaneously generated assets, no, through accounts payable. Okay, meaning to say, we should first identify kung ano yung mga spontaneously generated assets and also liabilities. And letter C, project liability and shareholders equity account that will not rise. So, yung boy is spontaneous assets, and letter C is a non-spontaneous assets, liabilities and equity. Okay. Sir, sinasabi po ba yan na spontaneous sila or non-spontaneous? The answer is yes. Sinasabi naman nila, no, don't worry. The problem will give you, no, will state or will inform you that it is a spontaneous assets or non-spontaneous assets. Okay. And letter dog class, ito na yung tinatawag natin determining the additional funds needed. Okay. How do we compute for the AFN? Okay. How do we compute for the AFN? So the computation for the AFN is additional funds needed is equals to the required increase in assets. Should be assets, sorry, mali yung pag-type ko. Minus spontaneous increase in your liabilities and minus increase in your retained earnings. So that's the formula. Okay? And the additional financing needed will be raised by borrowing from, please take note, bank as notes payable, issuing your long-term bonds, selling the ordinary shares, or some combinations of these actions. So, yan class, no, ang ibig sabihin, no, ng ating additional funds needed. We need to check or we need to establish, okay, the additional funds needed if talang wala na tayo makukuha in terms of internal funds. Okay. Step number 3, again, you will raise your additional funds needed, and with this one, the financing decision will consider the following factors. So you have here target capital structure. Mamaya class, I will have how you will be able to get your target capital structure. And number 2 is the effect of the short-term borrowings on its current ratio. Okay? And number 3, conditions in the debt and equity markets. And number 4 is all about restrictions imposed by existing debt agreements. So that's the things that you need to consider. Alright. And step number 4, please take note of this. Consider financing feedback. Okay? So depending on whether you have additional funds needed, will be borrowed or will be raised through ordinary shares. Of course, we need also to evaluate, no, kung tama ba ang ginagawa natin, particularly about your additional funds needed. Saan yung sources natin? Okay, sige. But before we begin with financial forecast, okay? So, ano naman class yung ating, first, the balance sheet, you have your cash, and you have short-term securities, you have account receivable, you have your inventories, you have your total current assets, you have your net fixed assets or your PPE, you have your accounts payable, notes payable, long-term debt, common stock, and you have your retained earnings. Okay. Okay, assumptions, please take note of this. Lalo-lalo na yung full capacity. Mamaya, I will give you sample. No? I will give you sample question. Okay? On how you will be able to compute or to know the importance of your financial projection. No? Each type of assets grows proportionately with your sales. Meaning, lahat ng assets ay tumataas with proportionally with your sales. Meaning to say, it is spontaneously assets. And also, spontaneous liabilities is that your payables and accruals will grow proportionately with your sales. Meaning to say, payables and accruals lang ang spontaneous assets. Wala nang iba. At 2002, profit margin of 2.52 and payout of 30% will be maintained. Okay. And your sales will are expected to increase by 500 million. Please take note of all the assumptions kasi nandyan yung mga question in the CPA board exam. But in of course, if you are taking MBA, yan naman ay importante din because it is for your decision making. Okay. Next one is all about key financial ratios. So for example, the break-even point, you have 10% in our company, but the industry is 20%. Poor, di ba? Profit margin, 2.52, industry, so you have 4.0. The return on equity, you have 7.20 and you have 15.60. The days sales outstanding, mini class 43.80 mo lang mabibenta, pero 32.0 dapat in the industry. So, poor din yan, ha? Inventory turnover, di ba? The higher, the better. You have 8.33, but you have 11.0. FA turnover, you have 4.0, and you have 5.0. Poor din. Okay? Mas maganda, mas mataas ang ating turnover. Total asset turnover, 2.0, and you have 2.50. Pangat din, no? Debt to asset, you have 30, and you have 36%. Good. Okay? So, good siya class kasi debt to asset ratio, mas ito na yung pinakamaganda, no? Diba? Dapat mas, di man mataas, no? Tama-tama lang is your debt to asset because in terms of the debt to asset, meaning to say, you are not risky. Okay? Times interest earned, mas maganda, mas mataas, no? Pangat din, no? So, current ratio, mas okay, mas maganda, pangat din. Payout, sakto lang. Meaning to say, very important is your financial ratios, no? Particularly in this financial projection. Please go to my video about analysis of FS, no? Para I explain there on how you will be able to compute or to have these ratios. Okay? Alright. Another key assumptions, the payout ratio now will remain at 30%. Again, what is the payout? It is your dividend payout. So, ano yung retained? Of course, if 30% is the payout, 70% is retained. No? And it is part of your appropriated retained earnings. Okay? New no new common stock will be issued, and any external funds needed will be raised as debt, and 50% notes payable and 50% long-term debt. Okay, so kasi nga, okay. First step. First step is to forecast your income statement. Ano nga yung unang class? Forecast your sales, which is at 25%. Given yan ha, sinabi kanina that the sales will increase by 0.25 or 25%. So just have 2,000 sales in 2002, just multiply it by the 25% or 1.25 because 100% plus 25%, you have here 2,500. Okay. Less variable cost. Sana kuha yung 60%. 1.2 divided by 2,000, you have here 60%. Okay? 0.60 times yung increase mo by 2003 of 25, 0.60 times 0.25, 1.25, sorry, or 0.60 times 2,500 because that's your sales, no? So meaning class, your variable cost is now 1,500. Fixed cost, 7. Yun naman sa 202, 700 divided by 2,000, you have 0.35. 35% times 2003 sales, you have here 875. Alright. So, makano yung EBIT to 2,500 minus 1,500 minus 875. Your EBIT is worth 125. Very good. Your EBIT is worth 125. So, earnings before interest and taxes. Okay? Okay. Please take note of the interest. No? The interest here is worth 16. Okay? It is worth 16 because interest is a non-spontaneous assets. Okay, very good. What else? You have earnings before tax, so you have 84, and you have 109. Yes. Taxes, of course, 109 times 40%, you have 44, and your net income here for 2003 forecast is worth 65. Okay, sabi kanina, payout is 30%. So meaning to say 65 times 30%, your dividend is worth 19. Okay, and the 70% is your RR or retained. So you have here 46. Okay, very good. That's your first step in terms of your forecasted income statement. Next one. Next one is about forecasted your balance sheet. Class, nandito na yung tinatawag natin spontaneous assets. Okay. Sir, saan po nakuha yung 0.01? Okay. Diba, 20 yung ating cash. 20 divided by makano yung dating sales? 2,000. Okay. Meaning to say, lahat daw ng ating assets are spontaneous. Diba? Meaning to say, if your sales will increase, cash, account receivable, inventories, and net fixed assets will also increase. So, nagaling yung 0.1, 20 divided by 2,000 yung previous sales or 2002 sales. 240 divided by 2,000, you have 0.12. 240 divided by 2,000, you have 0.12. And 500 divided by 2,000, you have 0.025. Just multiply it by your 2003 sales. Okay? Just multiply it by 2003 sales. Diba? 25 yun. So, 0.01 times 25, you have 25. 0.12 times 25, you have 300. 0.12 times 25, you have 300. 0.12 times 25, yes. Then 0.25 times 25, you have 625. Okay. Diyan ang galing yan. Okay. Next one. How about in terms of your liability? Diba sinabi kanina that the only spontaneous assets is your accounts payable and accrual. Your notes, your long-term debt, your common stock. Diba sabi ay non-spontaneous assets. Okay. So, meaning to say, 0.05, again, same lang yan ha. The 0.05 here is that ang ating nakuha lang yan sa 100 divided by 2,000. 2,000 here is your sales, right? Yes. So 0.05 times 25, you have 125. Alright. So meaning class, you have 125 plus 100. Your total current liabilities is 225. Your long-term debt is 100. Common stock is 500. Okay, di ba kanina sabi? 30%. Tingnan, no? Okay. So again, no? So you have here 0.05 as 125. And you have notes payable of 100. Total current liabilities of 225, 100, 500, 246. Sir, saan pa nagaling yung 46? Please take note of the 46 here. Di ba kanina, we have our dividend of 19 and addition to the retained earnings, you have 46. That's why the 46 here ay galing doon sa retained earnings. Less payout. Okay? Yan ang 246. If you notice, the assets here is 1,250 and your claims here, your total equity and liability is 1,071, meaning to say, yan ay hindi parehas. Okay? Your assets is 1,250 and this one is 1,071. Di ba class? Merong disbalance. Ang tawag doon class ay your additional funds needed. Kaya hindi na yan, yan na yung additional funds needed. So, what is AFN? So, the AFN here is the required increase in your assets. And if you have 250, kanina, 250 to ha? Okay. Yan. Ano ba yan? Yan. 1,000 and 1,250, right? That's why you have here increase of 250. Spontaneous in liabilities, meaning increase in your liabilities. Tira mo yung total CL, 200 and 225. Very good. And also your increase in your RE. Diba kanina you have an increase of 46 because the other one is part of your dividend payout. So, meaning to say class, the company must have the assets to generate your forecasted sales. Okay? And the balance must be balanced to have a raise of 179. Meaning to say, your total additional funds needed is worth 179. Okay? So, how will be the AFN be financed? So, you have additional funds needed or additional NP. So, di ba sabi kanina that 50% would be coming from the notes payable while the 50% will be coming from the long-term debt. This multiply by 50%. Okay? 0.5 times 179 and 0.5 times 179. But this financing will add to the interest expense, okay, or which will lower your net income and your retained earnings. We will generally ignore financing setback. Okay. Sige. So, di ba sabi 8950 sa ating tinatawag na NP and long-term debt. Okay? First pass. So, 203 pass, same pa lang yan, walang problema. Kasi ang ating additional funds needed ay nasa notes payable and also to our long-term debt of 89.5. Alright. Class balance na ba? Yes, of course. Assets is 1,250. Your total equity and liability or liability and equity is also 1,250. Alright. Okay. Determining additional funds needed. Ito class, pwede naman ganito yung formula, no? Using the AFN equation. Other formula, although may konting difference because of the rounding off siguro, no? Di ba kanina 179 to 180, okay? 1,000 lang naman, or 1 million. Pero, konti lang yung difference because of the rounding off. But the formula for additional funds needed is assets, okay? Assets divided by S0, meaning sales. Yung previous sales, divided by change in your sales. Minus liabilities divided by yung S0, meaning wala pang change. Okay? Divide to be multiplied by your change in sales minus M. M here is basically your profit, no? Okay? Then S1, meaning to say yung S1 mo dito yung ating pinatawag na sales after a year and your retained, no? Okay, so mini class yung ating 1 minus payout. Mamaya class, don't worry, I will give you sample. Ito naman class ay yung ating formula on how you will be able to compute for your additional funds needed. Okay. We'll give you sample. Okay. Another sample. Halimbawa, Kenny Corporation recently reported the following income statement for the year 2002 in millions. So, if your sales is 7,000, operating cost is 3,000, and you have your EBIT of 4,000, and you have your interest of 200, and EBT, earnings before tax, is 3,800, and you have your taxes of 40%, and your net income available to the common stockholders is 2280. Alright, so the company forecasts that its sales will increase by, okay, please take note, ha. The forecast is that sales will increase by 10% in 2003, and its operating costs will increase in proportion to your sales. Alright. The company's interest expense will remain at 200 million. So, meaning class, hindi siya spontaneous. Kasi, pag spontaneous, it will also increase your assets. And the tax rate will remain at 40%. The company plans to pay out 50% and the net income as dividends. And the other 50% will be an addition to your retained earnings. So, retained, no? Retained in your retained earnings. What is the forecasted addition to the retained earnings in 2003? Okay. So, ito yung ating, ito yung ating question. Same lang ba ito? Sorry. Magkaiba siya. Sorry. Wait na class. So, meaning mali ata yung, sige. Okay. Ito yung assignment nyo na. Sorry, mali. I only attached, ayan. Example, no? The firm has the following sheet, no? So, we'll give you na lang the answer for this one, ha? Okay, in our classroom. How about this one? So, cash of 20, account receivable of 20, inventories of 20, then fixed assets is 180. Magkano yung ating assets? 240. Okay, so that would be your assets. Then, accounts payable, you have 20, notes payable, we have 40, long-term debt of 80, ordinary shares of 80, and you have your retained earnings of 20, and liabilities is worth 240. Okay? Sales for the year just ended were 400, and the fixed assets were just at 80%. Okay, please take note of the capacity, ha? Kasi very important here is about the capacity. Diba kanina as discussed a while ago? Okay? But its current assets were at optimal level. Sales are expected to grow by 5% next year, and the profit margin is at 5%, and the dividend payout ratio is at 60%. How much would be your additional funds needed? Okay, please take note of this now. It's specifically about your additional funds needed. Okay, how do we do that? Okay, first thing is that magkano yung S0 natin, di ba? Ang ating sales 0 is worth 400. Given yan. Okay? Magkano na siya in after a year? Sabi niya, you have a 5%. That's why S1 is equal to S0 times 1.05. Magkano na yung S1 natin? 420. Okay? So, meaning to say, ang S0 is 400, yung S1 ay 420. Okay. What we will do is that yung 400 natin na sales 0, just divide it by 0.080. Bakit? Kasi nga ang sabi, ang capacity mo daw ay 80% only. That's why, magkano yung gross? 500. Okay. So, meaning to say, our sales capacity is 500. Yan yung pinaka mataas na. Magkano yung S1 mo? 420. So, meaning class, you will compare your S1 to the S capacity. Kung mas malaki ang S capacity, with your S1, no need to buy another fixed assets. Common sense na lang, di ba? Pero kung mas malaki yung sales capacity mo with your projected forecast, you need to buy fixed assets because hindi mo kakayanin na ma-achieve yan. Okay, very good. Okay, the balance sheet for additional fund or addition to the retained earnings that of course you have for 20 times 0.05. 0.05 is the increase in your sales. Tapos yung na-retained mo ay 0.4 and you have here 8.40. So meaning class, ito yung shortcut ha. The additional funds needed is 243. Ito yung shortcut, 243. Okay? Then minus 249.4 is equals to your negative 6.4. Alright? And your surplus is at 6.4. So nakuha yung 243. Okay, mamaya, we will discuss ito. 243 ay galing yan sa ating total assets. Di ba? Magkano yung ating equity now? 249.4. Okay. Sir, paano yung long cut? Paano nakuha yung 21? Di ba? Magkano dati? Di ba? 20. Yung taas class is your shortcut, sa baba naman yung long cut. Di ba? Di ba class 20, meaning class lahat yan ay spontaneous assets. So meaning class, 20 million, yung 20 million ay old assets mo, just divide it by your 400,000. Try nyo nga. 20 divided by 400. Okay? So ilan yan? So 20 divided by 20 divided by 400. Alright, yan ba ay 0.5? Yes. 0.5 times 20. 1, diba? Okay. So, meaning to say, 1 ang increase natin. That's why you have 21, 21, 21. Okay? Kasi parehas to 20. Kasi nga, parehas yan 20. Okay? Sa amin, medyo mainit na. Okay. Okay. So, that's why here, class, parehas yan at 20. Yan. So, 20, 20, 20. So, you have 21. In terms of the fixed assets, yan naman ay non-spontaneous assets. Meaning to say, you have 180. Okay? Accounts payable lang ang ating spontaneous assets, no? Kasi lang yung nagbago. Ay, hindi. Nagbago din. Ay, hindi. Accounts payable lang. So, 20 divided by 400 times your sales na bago, you have 21. Okay? So, meaning to say, class, in the difference is 243 minus 249. In terms of the retained earnings, anong ating idadagdag? Yung 8.40, diba? 20 plus 8.40. And you have here, 28.40. Meaning class, magkano yung AFN natin? 6.4. Because mas deficit pala. Kasi your asset is for 243, mas malaki pa yung equity natin. Okay? So that's your one example. Okay. Next one. Okay. Next one. Okay. Another example for this one. Ito yung kanina, no? Ito yung shortcut, no? 243 minus 249, you have negative 6.4. Okay. Another one. Cash of 10, account receivable of 25, inventories of 40, your net fixed assets of 150. Then you have your accounts payable of 15, notes payable of 20, you have accrued wages of 15, long-term debt of 30, common of 70, and you have 150. Please take note of this now. Sales during the past year is 100, and they are expected to rise by 50% to 150. Also, during the last year, fixed assets were being utilized to only 85% of capacity. Okay, 85% is your capacity. Okay, so and could have supported 100 of sales with fixed assets. So meaning class 100 sales, no, we're only at 85%. So meaning class 85% is our capacity. Assume that the splash profit margin will remain constant at 5% and the companies will continue to pay out 60%. So meaning class payout is 60%, so yung ating i-retained ay 40%. So how much would be your additional funds needed? Okay? So how much would be your additional funds needed? Okay. How do we do that? Ito class, another example. So una muna, 'di ba, yung ating 100. Okay? Tapos i-S1 mo 100 times 1.50 of 150. Tapos yung S0 mo, i-divide mo lang yan ng 0.85 para makuha mo yung pinaka-capacity mo. Our capacity is 117.65. Please take note of this. Magkano yung S1? 150. Pero your capacity is only 117.65. If your capacity is 117.65, sigurado, kailangan mo nang bumili, okay, ng equipment. Kasi, hindi kakayanin ma-achieve ang 150. How do we do that? Okay. The formula first for the target fixed assets to sales ratio is fixed assets, yung ating amount na fixed assets of 75. Okay? Yan, di ba? 75. Just divide it by 117.60, the capacity. So, meaning class, ang increase dapat ay 0.06375. Okay? So, fixed assets divided by your sales capacity. Alright. So, S1 times target ratio is equals to, magkano yung target new fixed assets natin is 150. Okay? So, S1 kasi yung class S1, 150 times 0.6375. Yan na yung ating tinatawag na fixed assets. Okay? So, that's the step. Again, S0 and S1, just multiply it, then para makuha mo yung sales next year. Tapos, yung ating fixed assets na old, just divide it by your S1. Okay? Sorry. Your S capacity is that your 100, yung sales 0, just divide it by your capacity, which is at 85%. So, meaning class, 117.65 lang yung capacity mo. Magkano yung S1 mo? 150. Diyan pa lang class, kailangan mo nang bumili ng equipment. Next one. So, magkano naman yung increase sa ating fixed assets? The formula here is that fixed assets, okay, yung luma, divided by your S capacity, which is na-compute natin na 117.65. Meaning to say, ang ating increase dapat ay 63% or 63.75. How do we do that? Magkano yung S1? Our S1 is 150. 150 times 0.6375. Yan dapat ang ating property, plant, and equipment. Tama ba? Yes. 95.65. Ano pa na class? Your ating cash, yung ating receivable, 15 pala is that spontaneous to ha. Diba natin 10? So, paano yun? 10 divided by 100 times, magkano yung sales? Given yung sales ha. Our sales is 150. Okay. So, again, 10 divided by 100, that is 10%. 10% times 150. So, you have now 15. Okay. Accounts receivable, ganun din yan, no? Account receivable is that 25 divided by 100, 25%. 25% times 150. So, 150 times 150 times 0.25, you have here 37.5. Tama ba? Yes. And so on and so forth. Pag nakuha nyo na yung class, just minus lang the assets and your total liabilities and equity. And the answer here is worth 40. But of course, you should have also addition to your retained earnings. So, medyo dito sa amin, medyo mainit ha. Alright. So, thank you very much and hope to see you soon with my next video. Okay? Thank you and see you all. Bye-bye.